Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the week, and what a week it was. I mean, we had the Fed announcement. We had Apple earnings. This week had a little bit of it all. We had the jobs report. What's going on in the markets today? Well, Dow's up about 300. NASDAQ's up about 190. Now, every day this week, we've had just update, right? I mean, okay, so the Fed came out and they waved the white flag, right? They said that inflation wins. Look, inflation wins. We surrender. We're not going to raise rates anymore. And the market's believing this. The market believes that they are not going to raise rates. So what's the market done? Well, it's taken off straight up. It's got this short squeeze going on. Everybody that was short has to get long now. The market's going up and it's going to go a lot higher from here. But be careful here. Be careful here. Look, we jumped over the 200-day. We jumped over the 50-day. But this market needs to pull back. And it's going to give some back. Going to give you an opportunity to get in because this market is going higher. They're going to push it up to all-time record highs. Incredible, incredible, right? Okay, you see, here's the thing. Here's the thing. I call it the Zimbabwe effect. The Zimbabwe effect. Now, if you lived in Zimbabwe, you would know a lot of millionaires, a lot of billionaires, and even some trillionaires, right? But they're all broke. They can't buy anything, right? But the Zimbabwe stock market way up here, but they're broke. They can't buy anything. You see, what they're doing is the money is deflating. It's going away. The money's inflating. It's just getting destroyed. The money's getting destroyed, right? And we got the same thing going on here. Everybody's going to become a millionaire. It's going to be great. But you know what? They're all going to be broke. They're already starting to be broke. I see millionaires now in the food lines. The food lines, yes, they got $1 million maybe in home equity, but they can't afford to eat. It's really incredible, right? It's incredible. But be careful with this rally here. It's going to pull back. It's going to pull back. The reason I say it's going to pull back is number one, Apple Computer came out with earnings. It's not participating in this rally. And when Apple doesn't participate, be very cautious because we're going to get a pullback. But that's probably a chance to buy in because I think they're going to push this up into the end of the year. I think we're going to be close to a record high, if not hit a record high. Now, don't get me wrong. This market's going to come crashing down. This is not going to end well. In 2024, you're going to see the crash of a lifetime. Now, that's just my opinion. A lot of people think, oh, Mike, 2024, that's an election year. Mike, we're not going to have a crash in 2024. I don't think they're going to be able to hold it up. Right now, we've got the Zimbabwe effect, right? We're saying, okay, we surrender inflation. Inflation wins. Inflation wins. We're going to wave the white flag, right? We're waving the white flag. We're not going to raise the rates any farther. Now, I still think they probably got another quarter point to go, but what difference does that make? You got 5.25, 5.5. It's not going to bring inflation down. Inflation is still out of control. You don't believe me? Just go to the grocery store. You don't believe me? Go to the gas station. You're going to see these numbers get much higher. Inflation comes in waves. We hit that first wave up here at 9%. Then we came all the way down to 4%, right? We're going to get another wave coming, and they're out of ammunition. The Fed is out of ammunition, and that's the problem. You see, the Fed has already, they've broken the banking system. Financial crisis going on right now. Nobody wants to talk about that. Nobody wants to talk about the runs on the bank. There are being bank runs right now. Banks are in big trouble. It's a financial crisis. A credit crunch is going to happen. But so the Fed, they broke them. They broke the banks. Okay. Now what else did they break? Well, they're breaking the middle class. They're breaking the middle class. See, the middle class, as prices go up. Now, maybe they own a house, right? Maybe they got all that equity envy, but as prices go up, they have no money, right? They have no money. And my car insurance up 20%. My utility bills up 20%. Food prices up 40, 50%. See, people have no money to buy these things, right? But oh, they got that equity. They got that equity in their home. Now, mark my words that this equity Well, it's just a paper gain, right? It's not real. It's not real. If everybody wanted to get out, they couldn't make it out. Maybe one or two make it out up here where Billy Bob got out of, but most people aren't going to make it out. Billy Bob made it out. He's down on the beaches of Mexico still waiting for the great reset to happen in the housing market, in the stock market, there's going to be a reset. There's going to be a lot of resetting going on. It's going to get really ugly. But right now, everything to the moon. Moon boys are winning, right? The moon boys. We're going to push this up. We're going to get Bitcoin to $1 million. We're going to print money. Okay, so here's what happened. Here's what happened. Okay, our government, there is no way in the world that they can stop printing money. They're not capable of not printing the money. They have to print the money. And they're going to print trillions and trillions of dollars. We're going to pay not for one war, right? We're paying for that one over there. You got Putin in the Ukraine. We're paying for the Israel war. And we're going to be paying for a third world war pretty soon. Maybe even paying for World War III. Who knows? I don't know. But we're paying for these wars. We're going to print the money, right? I mean, well, they just passed in the House. They just passed it. We got all this money to send to the foreign countries to pay for these wars. It's passed. So, okay. So the government cannot stop. They're going to print. They're going to print, right? Now, I mean, the proper thing to do would say we're not going to print another dollar and we're going to reduce the government by 30 to 40%. But everybody would scream because there'd be too much pain. Believe me, the pain is going to be so much greater about with the road we're taking. The road we're taking is the Zimbabwe road. Zimbabwe, we're all going to be millionaires. It's going to be really cool. A loaf of bread may be $1 million. We will hyperinflate. Okay, so the government, they're just going to print money, right? They can't help themselves. That's what they do. That's what they do. They're going to print this money. Now, we can't even pay the interest on the $34 trillion, let alone pay down any of the $34 trillion. Could you imagine paying down some of the debt, even paying down $1 of the debt? You see, our budget deficit, it's $2-3 trillion over what we're pulling in. So we're going to keep that debt going, you know. We're going to get to 30, 40, 50, 60 trillion dollars in debt. So the government, how's it going to pay for the interest on the debt? Just to pay for the interest on the debt, they have to issue bonds. Now, this is fascinating. This is fascinating. Now, just in 2021, the interest on the debt, what was $475 billion. Every year, $475 billion of taxpayer money goes just to pay the interest. Now, that's in 2021. Okay, all right. So we have doubled that number. We've doubled that number. Right now, we're at $900 billion is the interest payment that we're paying on the debt. Right now, this year, 2023, $900 billion. 2021, $475 billion. Okay, so we're going to get to $900 billion, almost $1 trillion, right? Next year, that number doubles. It's going to be almost $2 trillion just to pay the interest, not to pay off any part of the debt, just to pay the interest off, right? Okay, so we got to bring in $2 trillion next year because all this debt's rolling over. It's rolling over at the 5.5 to 5 to 6% rate, right? Okay, it was down here at 1 or 2%. They could have financed it all for 30 years, but they chose to go, we're going to finance for 6 months, right? Because our politicians are stupid. All they care about is staying in office, and they want power. They want to stay in power, and they don't want to do what's right for the country. Of course not. Of course not. They got to stay in power, so that's why they got to print money. They have to print the money. Okay, so now they print the money, right? Well, how do they get the money? Well, they issue bonds. They issue bonds, right? They issue bonds. Okay, so they put these bonds out there for people to buy them, right? Now, nobody wants the bonds anymore. So who has to buy them? Well, our Federal Reserve's got to buy them, right? Federal Reserve's got to buy them. But here's the thing. Okay, so when nobody buys them, they have auctions for these bonds, and sometimes there's no bid on them. There's just no bid. So they have to raise up the interest rate to get a bid. Now, these are the 30-year ones. These are on the long side, right? The long side of the bonds market, the 30-year, those rates are going up. Now, they can control this over here, the 6 month, the 1 year, the 2 year. That's controlled by the Fed when they come out and go, we're raising rates, we're lowering rates, we're raising, we're lowering. That's controlled by the Fed. But the 30-year is where the action's at, because that's starting to go up. Nobody wants our 30-year bonds. Nobody. Would you buy them? I wouldn't buy them. I don't want them. I don't want them. Nobody wants them, right? So the rates start to go up on these things. So the yield curve is inverted right now, right? So the 10-year pays more than the 30-year. But that 30-year is coming up. It's going to blow right past them. Now, what's that going to do to mortgage rates? It's going to send them much higher, and that's going to send them 10% may be a low mortgage rate next year. That may be considered a bargain, right? And some of the realtors have that battle cry right now. Hurry up and buy right now. We can still lock you in at that 8% number. And we can lock you in at that, right? Okay, and now it's interesting. There's a little bit of a relief rally right now in the bond market. Now, actually, the HYG, the junk bonds, man, just take a look at the chart of the HYG. Who's buying this junk? It's crazy, right? Okay, well, I got a hunch who's buying it, but I don't want to say that. You know. All right. So anyways, we look at the TLT. Who's buying those bonds? Okay. So anyways, we're getting a little relief right now, a little relief rally in the bond market. But this is so far from over because the government's going to keep printing money and the rates are going to keep going up because nobody's going to buy these bonds. It's going to be no bid on the bonds. So what happens when there's no bid? Well, they got to raise the rate up a little more, right? All right. They're not buying here at 5. Well, maybe you'll buy at 5.5. No bid yet. All right. We'll put them up to 6. Oh, still no bid. All right, we'll move them up to 6.5, maybe 7, maybe 8, 9, 10, right? So the bonds on the long end are going to be going up. Now they're going to hold this right here. They're going to hold 5.5, 6%. I believe that they can hold the 2-year there, but the 2-year then this is where the bad stuff starts to happen. This is where your house gets in a little bit of trouble. You see, the 2-year is going to be stuck here at 6, but this re-inversion of the yield curve, right? Right now it's inverted, but when it comes back to where the 30-year starts to go up to 7, 8, 9, 10%, and your mortgage rate starts to hit 8, 9, 10, 12, 14, 16%. Oh, that's where the fun starts. I mean, it's going to get ugly, right? It's going to get ugly. Now, okay, all right. So people look at bonds right now. They look at bonds as like the safe haven asset. The safe haven asset, right? But investors are starting to realize, well, it's not really a safe haven, is it? No, it's not. Why? Well, because it's not liquid. They're finding out that the bond market is illiquid. Now, that's fascinating to me. Nobody wants to buy them, so who are you going to sell them to? Yeah, a lot of people are diving into bonds today. You can look at the charts. People are diving in with both feet, right? They want to get those bonds. Hurry up and get them. This is all changing now. So they got them now, but pretty soon, maybe even starting next week, I think it'll be next year, but push it out to the end of the year, right? But they're going to want to sell those bonds. And there's not going to be any buyers. There's just not going to be buyers. And the bond market, the interest rate on the bonds will be up there 10, 12%. I mean, it's going to be terrible. But you see, here's the thing. All right. So we got inflation. Inflation is real, right? It's real. You know it. I know it. They'll tell you it's transitory. Now, when we get hyperinflation, they're going to tell you that's transitory. And we will hyperinflate. We have gone the Zimbabwe way, right? Well, okay, look, the government's going to print. The Fed's going to buy, and this is just going to put our debt 40, 50, 60 trillion. We're going to hyperinflate. All right. Going to hyperinflate. This is just my take. Yours may be completely different. But you see, all right, so let's get it to the homes now. The home market, right? All right, so you got all this equity, right? And this equity is part of the Zimbabwe effect. You got the stock market up here. People are getting rich. People are becoming millionaires in the stock market. And you got these house equity. This house equity is up here, right? And everybody has this equity envy thing. Oh, man, it still says mine's worth $1.2 million. I got $200,000 in equity, and I just bought 2 years ago, and I've already made $200,000. That's more than I make on my job. That's great, right? That's great. You got all this equity. Look at everyone is not going to make it out. Not everybody can be Billy Bob. Billy Bob's a smart guy. He got out, right? And there's going to be a few you that get out close to the price Billy Bob got. You're going to sell and you're going to take your equity out because there's no other way to tap it. You can tap it with a HELOC, but you really can't, get the equity out anymore. You can't refinance because you're locked in at 2.8%. You refinance, you move up here to 8%. You don't want to do that. So your equity's locked up. Okay, so this equity envy's going on though. But mark my words, by 2025, you take next year off, 2025, that equity is going to be gone. I mean, it's going to be destroyed. It's going to be obliterated. Now people go, but Mike, you've been saying this for 2 years now. Now, how long are you going to keep saying this until you admit you were wrong? I get these comments all the time. Look, I want to be wrong. That'd be great. I'm a real estate broker. All my wealth is in my house, right? If I was smart like Billy Bob, I would sell, get the wealth out, and then just take it off until the house is reset. Not everybody's going to make it out. Okay, the equity's going to be wiped out. I get that. That's my opinion. I don't want that to happen. That's just my opinion. Right now, we're seeing it in the housing market. The days on market starting to shoot up, right? It takes longer to sell a house right now. Okay, price reductions. Oh man, you should see my inbox. Every email starts price reduction. That's the first two words. First two words are price reduction. Everybody's reducing the price, right? Okay, so price reductions are skyrocketing. What else? Inventory's going up. It's a very strange time of year for inventory to be going up. Now, it's fascinating to me that that's happening, but it's strange to me also because this is not the selling season. I got silver houses that are coming up for sale at the beginning of next year. They put them up, February, March, get them ready for April, May. Now, I don't think the ones that are on there right now are going to make it out, but, they get the price reductions going. So maybe they do. Maybe they make it out, right? But look, this thing is not going to end well. We got the Zimbabwe effect going in the stock market. Now, I think the stock market next year could drop easily 50%. Easily. Houses, no question. 40, 50% coming down. Both of them are going to come down together. Right now, they're both going up together, right? I mean, everything's going up. We're the Moon Boys. Anyways, get out there, Moon Boys. Give me some comments. Moon Boys love to give me comments. All right, we got the weekend ahead. Get out there, enjoy your weekend. Everybody give me the thumbs up. Hit the subscribe button. I want to talk to you next week. It's going to be exciting. I think we're going to get a down week next week. You see this rally up, probably going to give some of that back. That's just my take. But they will push this market higher into the end of the year, probably even to a new record high. Call it the Zimbabwe effect. Call it whatever you want, but it will not end well. Will not end well. Get out there, everybody. Enjoy the weekend. I'm Tall Mike. Bye-bye now.